it crazy, oh, you ain't on a payroll. Can't be hanging with the same bros. We don't even go to the same show. So please be quiet. I'm being polite. Get it crazy, oh, you ain't on a payroll. Can't be hanging with the same bros. We don't even go to the same show. So please be quiet. I'm being polite.
Hey yo, T-Beats, you killed this one, don't
Ice cubes up in my cup. If it's spice, one pour it up.
Hello guys and girls and welcome back. It's your boy Big John. That's at the bottom of the screen. If you like to listen to my music, so is all the relevant information I'll be speaking about in this video. And today what I'm going to be doing is I'm going to show you how you're going to find a great way of scalping gold using supply demand zones or order blocks. This is going to be fantastic for people that are, at the charts more often, and they really are just trying to push accounts as quick as possible in order to grow the accounts. Now, of course, this is going to take a lot of time in your day to be able to do this, as in staring at the screen and stuff like that, but it is very effective and is something I know a lot of traders are interested in when it comes to trading gold, which is scalping. So I hope you're going to like this one, guys and girls. Don't forget to like, comment, share, subscribe. Come on, right now. Just click that like button. Just don't be a pagan. Come on. Let's get straight into the video.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.
Okay, so the first thing you need to do is you want to go to My Forex Funds. Now, the reason for this is because a lot of people are going to be trying to grow small accounts and not realizing that when you have a small account, it's harder to grow if you do not have enough capital in Forex. So if you go over to My Forex Funds, go over to the program section, then go over to evaluation. Once you are in evaluation, you will see this once you scroll down, and you want to opt for a $5,000 account. So you want to go to select plan. Of course, you want to pick your platform, MT4 or MT5. I use MT4, so that's what I'll pick. And you want to register. Now, another thing I will be explaining to you guys and girls, I have an affiliate link which will help me out greatly if you are going to do this. The reason why I'm telling people to go and get themselves a 5K account is so that we have more probabilities when it comes to entering these trades I'm going to be explaining, because you will see that trades can win and lose. Then head over to TradingView. So the first thing you're going to want to do when you're on TradingView, you want to go to select layout. Make sure you're on number 2 in this one here. Now that I've expanded my screen to a full screen, I want people to understand on gold, you're going to have a 15-minute time frame on the right and a 1-minute time frame over here on the left. So all we are paying attention to here is nice supply demand zones or order blocks. This is what's going to help you to be able to scalp these 50 pips a day that I talk about in the thumbnail. And you're going to see the fantastic trades we do manage to acquire here. So when we do start the day, the week, whichever it is, this blue line here separates the days for me, by the way. So this day, which is today, we can see that the market opened from here, and all we want to do is pay attention to breakouts. We're going to use our 15-minute time frame on the right to pay attention to the breakouts. There was a break of structure here in the market, so I'm just going to label this so people can understand when I say that. So there's a break of structure here. We can see that there was a break of structure because the market came off of this level, and you can see this massive break here. It's literally what it means, a break of structure. And we would have been looking for an entry in this. So we can see that this could have been a scalping trade that we could have taken and made some type of pips. But realistically, how I'm going to explain it to you, this would have been a losing trade based on what I'm going to go through later on. So let's just remove this. When we head over to this section over here, we see the market has gone from a high and to a breakout. Where's our next break of structure? Remember, this is the same chart. This is just a 1-minute chart. So every candle represents 1 minute. And over here, each candle represents 15 minutes each candle. The market has created a break of structure over here. So we can see the market broke through here with this candle at 2:15 in the morning UK time. And we're looking to make sure our zone that we do draw is from the highest point here. So our rectangle will be from here and to the close of this breakout candle over here. All we are doing is simply waiting for the market to break out, which you do see here. And we are going to be waiting for a retest towards this level. So the retest that we did actually get in the market here, if we just go ahead, was right over here. Now, I'm not saying you couldn't have traded all these things here, but this was just a clean setup for you to be able to see. And what I mean by traded all these things here, we'll go into the previous day before this and I'll be able to show you that. But you can see your entry would have been right over here. Look how the market perfectly touched that breakout zone area, gave you a 1-minute candle rejection. You would have been able to put your trade in here, and then you would have had your entry here, your stop loss above here, and then your take profit could have been even all the way down here if you wanted it to be. But of course, you have to be realistic. This already was a 1 to 6 trade. So you could have had just take profit here based on market structure over here, or you could have had it down here. You could have even had it up here, which was still a 2.6 trade. So you had 3 levels of a take profit. But of course, the market gave you about this here, which was a 6.4. So this is a nice, simple way of explaining it. I just want you to see how a trade setup does look nice and clean. But of course, I'm going to go a bit more in depth for the traders. So again, this is another day in the market. And what do we see here? We're looking for breakout. So we can see on the right over here, our 15-minute time frame, we can see that the market is at a high. Let's just move this out of the way. We can see the market here was at a high, and then it created a level of support here. We can see lows of rejections. We can even see the market bought back off of this level. And then where did we get our breakout? We got our breakout right around here in the market. So I've even gone down to a 1-minute time frame and drawn an area so you can see market structure on a lower time frame, which is lower highs and higher lows and higher highs and lower lows being formed. And we can see right over here that the market, when it did break out to this point, there was actually a lower high formed here. So when we was looking for our re-entry, we was looking for our breakout and our retest on the 1-minute time frame. We can see here it broke out, and on the 1-minute time frame, we can see our retest to this area again for our supply zone. So anything that's a sell will be a supply zone, these rectangle boxes. Anything that's a buy will be a demand zone. We had an entry with a rejection here. It didn't touch it exactly, but we can see that there was a rejection here, and we even had our entry here. And based on market structure, even on a lower time frame, we had a lower high over here. So our stop loss would have been based on market structure, which would have been just above here. And then you can see for this entry that this was a fantastic trade that went all the way down here, altogether being a, if we look over to the 15-minute time frame, this was a 30R trade with a 5-pip stop loss. So you might be wondering how certain people are getting these types of trades. They are trading like this. They're using multi-time frame analysis to be able to get a better entry when it comes to finding probable setups in the market. So let's move over to a possible buy. So now the market did go down here, and let's pay attention to the 15-minute time frame. The market did go down here, but for it to break structure on this time frame, which we need, the market's last bit of structure was all the way up here. So that would have been a bit of a funny trade, and there would have been a lot of drawdown if you had to put a stop loss, etc. So we are going to be seeing when the market does form its next structure. So we can see here was a low, here was a high, here was another low, and then it pulled back up, created a high. So then when it did create this high, we wanted to see the market break this level. Where did we see the market break this level? So if we just go over to here, we can see that, let's just move this back over here for you. And then we just look up here at this lowest point here, and then the close of this candle would have been where we would have put this rectangle to. So we can see the market broke out here, and we just want to know our entries for our breakout and our retest into the top bit of this line. The market did break out here, but this zone was violated. And what violated means is that the market broke back down to the downside. So we would have either been looking for sells here on a continuation or waiting for a new zone to mark up. And where would our new zone have been? Our new zone would have been right over here, people. You can see that there was the breakout, and here was our low right down here. So let's put it where the wicks are. So our new box would have been down here. Now, of course, we were looking for if market structure was going to continue to go to the downside. So you would have been able to see, and I don't want anyone to say, but you're just cherry picking, John. No, we would have had it. Where was it here? It was just over here before. So when we saw this breakout, we would have been looking for any continuations of trades, and we can see it break out here. So you might have taken this trade, and this would have been a losing trade for you here because obviously the market went back. You could have taken another trade set up here for you, and this could have been a losing trade for you because you could see the market again came back in. So you would have had about maybe 2 losers in between this area. I'm being very realistic with trading. It could have been even up to 3, but this is why you need to obtain a 5K account. Use your $50 to go and get yourself a 5K account. It's okay. You would have taken some very small losses. Remember, the stop losses are like 5 to 10 pips, maybe 15 pips. So you would have taken some small losses here. That's absolutely fine. But now we were waiting to see what happened next. So we can see the market broke back into this area. And again, our next level of structure on a 15-minute time frame would have still been here. This is where the last swing high was at this time. So until this swing high got formed here, this one right over here, so let's just move it here. Now we would have been able to draw a rectangle like this, and we're not just entering the trade like this. Remember, the market's forming this, giving us an idea that something might be happening. So as soon as we saw this breakout in the market from this level here, we saw a breakout here, and it even broke out from this level over here. So this was fantastic for us because now we can see the candlestick broke out this level, and it also at the same time broke out the level we was waiting for before. So we can put our rectangle box up to this level here. Let's just put this line here so you're aware. And then now look what we see. We see the market had broken out on a 1 minute time frame all the way here. Remember, this was one 15-minute candle that broke all the way out. So it's not too bad. We would have been above this level. And now what we can see is that the market pulled back, and just like we saw before, we would have been able to gain an entry here. Now, why would we have put our stop loss towards this level? Again, look, there's 1 minute structure over here where there was a higher low being formed. So we're just going to use this as our structure. This is how you get a nice tight stop loss to have the least amount of pips in your stop loss area for you to be able to get the best RR you can get in terms of trading. Again, when you trade like this, the whole idea is not for you to win every trade. You could lose 7 trades in a row, but if you have a RR of like 13, you know, or 15 or something like that, this was a 31 RR. What did it matter if you lost 5, 6, 7 trades in a row? But by the time your setup came again and you was able to get the better entry, then you will get the trade you're looking for. So you can see straight over here, we would have got this trade. And if we look over to the right, again, this was a 31 RR trade, which was absolutely beautiful. And with all that being said, guys and girls, if you want to get into any of my services, which is the Trinity alerts, any signal service or anything like that, then please let me know. Of course, I'm not going to be giving out 1 minute gold signals like this. So let's not be ridiculous, guys and girls, because this is a lot of entries. And like I said, it's for the people that have a lot of time on their hands, but in the end of the day, they do want to scalp. Here you go. I've just given you a fantastic scalping multi-time frame analysis strategy. And with all that being said, guys and girls, it's your boy Big John. Don't forget to like, comment, share, subscribe. 100 likes. Come on, guys and girls. Don't be stingy. Let's go. Peace.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.